Here's Gary Wagner with WFGForex.com, your daily market update for Forex Gold. It is the end of the week, Friday, July the 16th, and this is the daily report. Gold under significant pressure this morning, currently trading down about $18 to $19 lower. We do have double digits at 1190.10. Low today 1185.20, and the high right around 1210. On today's report, we're going to talk about this continuation in this correction that we've been looking at. We're also going to talk about what we are looking at for the next week and 2 weeks to come, all here on the Daily Report, our weekend review. For those of you that recall yesterday's show, I was talking about the fact that these double dojis that we had were absolutely ominous indeed, and that when we look at this doji cluster, we had 1, 2, 3, 4 of them here before this significant drop at the beginning of this corrective A wave. I did point out the fact that we did try on 3 occasions to breach that, call it 1218. I was looking for about 1221 to 1224. However, the market did not have enough steam really to make it past this 1218. We had this consolidation, the shift in power. The shift in power because the market had been coming off of a low of 1187 and moving up higher, but we had this real choppy market in that we had red black, we had alternating cycles, we had no defined trend. We get the shift in power with the dojis, and lo and behold, boom, the market comes down about $18. The one thing that I am finding interesting is we are getting a set of what we call matching lows here. This low here, this low here, this low here. Although they're not exact and they're not equal lows, you notice that we are finding tentative support at least right in that same area, 1186, 1187 to maybe 1189. You know, I have been looking very deeply to try to get an idea of what kind of corrective phase we might see. I've talked about the standard plausibilities, which is either what's called a zigzag, and a zigzag simply looks something in its simplest form, where you have an A wave down, a B wave up, and then your C typically goes to a new or lower low. The other one that I talked about really was a flat. A flat can be seen as more of a W type, and trying to discern really what kind of corrective pattern we are looking at. One plausibility is that what we are seeing is what's typically called an irregular corrective pattern. It's too early to tell if we're going to get really a triangular pattern. A triangular pattern, what we would want to see, of course, would be for these ranges to get tighter and tighter, as you can see here. And we're really not witnessing that. We've had this one low that we had. It took it back up to that high. This was that high at 1265 right in here. We then went and tested 1203. That didn't hold, and then we tested this one area here, which is 1287. And if we take a look at our Fibonacci numbers, what you'll see is if we look at this as wave 5 from here to here, you'll find that this bottom matches up quite nicely. So as you can see, drawing our Fibonacci from this low here at 1165, 1264, this $100 move, what you will see is that we do have this 78% Fibonacci retracement number, which seems to be the area in which the market absolutely wants to hold. Now, in terms of a 78% retracement, if we take a look at this last wave 5 here, this was that historical top we hit at 1221 back in December 2009. When it came down, here is your 78% retracement. So it didn't quite make it there, but came very, very close. And then, of course, on that C wave, completely took that out in its entirety. The fact that we had a much shorter wave 5 here, but as I said, this one level seems to be showing us some support. So, traders, what am I looking at over the next weekend, couple of weeks, and what is my more long-term view? When we look at the big picture in gold, our first record top here at 1221 back in December, we go into our corrective phase, taking us down to a low of about 1040. From 1040, we push solidly up to our record top at 1265, and then we enter our corrective phase. I personally believe, and we're going to have to wait this out, but I think that because we found this real strong support here in this area, I would look at the plausibility over the next week to see this A wave end and for us to go into our B wave, which is going to be an impulse wave during our corrective phase. Now it's going to be short term at best, and then our final leg down, which if it's a flat, is simply going to take us back to approximately 1187. If it's a true zigzag, it will go to a new low, and my anticipation will be that it will find support here at 1170. So, long term, absolutely, I'm still bullish. If you look at some of the articles that have come out, this one I'm quoting from Kitco. In the short term, gold may have limits to the upside potential, but the long term trend remains intact, as most market watchers believe. The trend is still up, but July has been difficult for gold. It's struggling with counter-seasonal tendency, and this is according to John Pearson, president of the nationalfutures.com. Gold has been overshadowed by the strength in equities. Odd, it's down 200 points today during the first several days of July, but many market watchers still don't put much faith in moving higher in stocks. My personal sentiment right now is that we'll have to see how it reacts here in next week's trading. But it does appear as though we've gotten this push down, and I would be looking at a plausibility for this A wave to end. We'd look for an impulse wave and then a final corrective wave. And then we would start our count again, moving into our impulse phase. And traders, I personally believe that's where we'll see the market run, surpass this 1265. And what I believe is that we'll see 1300 gold, again, 6 months down the road. This has been Gary Wagner with WFGForex.com. Wishing you, as always, good trading. We'll talk to you next week. Bye-bye.
When I look out my window, many sights to see.